Before I actually speak about what I was asked to speak about, I just wanted to kind of step back a little bit, dimensionalize this conversation. I do get to travel a lot, as you said. And maybe just starting with, you guys probably know Roy Amara, who was a great American futurist, who came up with that very famous and often quoted sentence that we tend to overestimate the impact of technology in the short term and underestimate the impact of technology in the long term, which has held to be true in many, many situations. I think we live in a very fascinating age, and one that has profound ramification not only for business but also how society is gonna be in the future. To keep it pretty simple, we went from the agrarian society to an industrial society, then we went from an industrial society to a services society, and I think we're in the early stages of going from a services society to a robotics society, and that has a lot of profound implication. What held true in all these transitions was the pace of technology change accelerated every time, and society came out better at the end of the transition than it was before. This is very true. So as you think about some of the populism and the political conversations, all of that is true, but keep that in mind that technology has tended to work for the betterment of the world. Now, we're in Canada, and I spend a fair amount of my time here. I live here, I pay my taxes here, but I do also spend a huge amount of time outside talking to global capital and global investors. And it's pretty interesting what's happening out there. First thing, SoftBank. I mean, you guys all know SoftBank, a Japanese billionaire who made his money in telecom, decides one day that he wants to launch a big fund to capitalize on future technologies. He basically sets out with a goal to raise $100 billion. Nobody's ever raised a $100 billion fund. He did it in 6 months. He put $20 billion of his own money, went to see the Saudis. They gave him 45, called Larry Ellison, another 10. Very quickly, that's $100 billion. There is no investment thesis behind what's called now the Vision Fund, beyond the fact that they want to invest in robotics, in artificial intelligence, in genomics, etc. Masa Hassan, I don't think has been to Canada, or if he's been to Canada, I haven't heard about it. We're not on the map, and I'll come back to this topic because it's an important topic. The second one, I was in Shanghai recently, a very large bank, global bank, talking to the chief operating officer, and he goes, and this really struck me, he goes, my mandate is to eliminate 90% of our back office jobs. We've got 50,000 people, 45,000 of these people are gone, and they're going to be replaced by robots. Now, these are not robots. These are not like actual physical robots that pick things up with their hands. Robotics is mostly about software and algorithms, but that's 90%. I was struck by the aggressiveness of that target. And the last example, to just kind of put a little bit of color around this, which is much more prosaic, and also shows that innovation can find its way in a lot of different places. When you think about fish farming and you think about the sources of protein that we have, we all know that meat, creates, global warming challenges. But actually, our oceans are very, very polluted, and you see this up and down the BC coast, where the mercury levels are very, very high for the native populations. And so, 97% of North American fish consumptions is coming from basically offshore farms. So that's how it is. There's very little wild fish that we're eating these days. Now, one of the big bets and where innovation is happening in this industry is that fish farming is going onshore. And you're going to start having factories, so literally greenhouses, that will make fish. So you will take, and this is happening in Milwaukee, in Wisconsin, this is happening in Minnesota, you have these old mothballed Midwestern factories that are being reformatted to basically grow shrimp and sea bass and the likes. And so that fish farming industry that looks very, very state is seeing massive amounts of innovation. So all of this to tell you, this is really important. This is beyond our businesses. This is also about how our societies are going to evolve and how we keep Canada, the great nation that it is. So on the topic at hand, let me see if I can figure out how to use this. As Neil said, we've done quite a bit of work on this notion of how can corporates innovate and how can they participate in the ecosystem. As you said, Neil, accurately, the last 10 years or so has seen a massive boost in terms of the number of big companies that are engaged in corporate venturing, and that takes multiple forms. We'll talk about that. You see the data. What's really interesting in the US, the chart on the right does include Canada, but I have some data that's separated later. You see that roughly 20% of venture capital dollars today are coming from corporations. That's a significant amount of money, and not a trivial one. Now, a lot of different ways to play. So, typically when people hear corporate venturing, they somehow think that it's about setting up a fund, a VC fund within a large corporation. You need to raise 50 million or allocate 50 million from your own balance sheet, and then you need to go hire, venture capitalists, and you've got to pay them the same thing. And yes, that is one of the many playbooks, but to be honest, it's not the most successful one, and it's not, I think, the one that is sustainable. There's all sorts of reasons why a large bank or a large telecom or a large insurance company is not a venture capital fund, and never will be. We don't have to go through that. So as a result, we've seen the evolution of a lot of different archetypes of how people do this. Anywhere from partnerships, strategic partnerships, to licensing, to looking at the patent world, to spinning off assets and to creating incubators and accelerators in-house. There's a wide array of strategies that are being employed today. Research partnerships with academia, which has been quite successful in some countries like Israel or Britain. And we have plenty of examples and data on this. So let's deep dive a little bit on it. The three main ones that we see as being actually quite successful today and with a lot of potential going forward. Corporate venture capital, so basically putting money to work. That doesn't mean necessarily setting up a fund. It's just investment. We've had this in Canada with the BlackBerry Fund. There's all sorts of small funds where corporations have put some money. And typically you take a small equity position, gives you a little bit of access to what's happening in the startup world. And it works sometimes, it doesn't at times. The best example here would be Qualcomm. I think Qualcomm has been at this for 17 years. I think they set up their fund in 2000. They had a very, very dedicated VC-like approach, and one of their best investments has been this Chinese company that you guys probably know, Xiaomi. By the way, when you think about the impact and the speed of innovation, Xiaomi is the third largest manufacturer of handsets and mobile devices in the world. This company was created in 2010. It has $60 billion in revenues. It did a round recently that I think valued it at about 50 billion. Qualcomm was one of the very early investors when Xiaomi was basically the founder of 6 guys. And I don't know. They never divulged how much Qualcomm owns of Xiaomi, but it's a very significant stake. Now you could say that's luck, but Qualcomm knows the ecosystem very well. They believed in these folks, but the speed at which Xiaomi has been created is quite astounding. And we need to think about how we create Xiaomi stories in Canada. So that's the corporate venture capital. And that has been growing quite steadily. You see that it's 40% penetrated, so it's a vehicle that's being used. Accelerators and incubators, we have a fair share of these in Toronto, between Morris District, between what Sheldon is doing at Ryerson and other places. So I think this is well understood, and I think corporations have increased basically the use of this tool. You see that's the yellow line on the chart. That's the fastest growing, and I think that's a terrific way because it's actually you control the cost, you control the ecosystem, you get access to ideas and innovation, but you don't have to necessarily deploy your balance sheet. You don't have to explain to shareholders why you're allocating capital away from very, very lucrative core businesses to something that's more speculative. And then the final one, which we see more and more of, is this notion of innovation lab, which is really creating teams. You guys have heard about hackathons. There's a lot of hackathons happening in Toronto these days where you just take teams of developers, you put them in a room, and you say, beat my IT system or beat my mobile application. So these are what we see as being the main 3 ones. Let's skip this. In terms of what we have found, each industry has its own approach, and you've got to be sensitive. So financial services, obviously, with the impact of fintech, is really thinking about mobile and the application of mobile. The chemical industry is thinking about corporate venture capital in a completely different way, and it's much more about making capex more efficient or making the future of manufacturing, what we call Industry 4.0. So in a world where basically humans and robots are really working together. By the way, I stumbled upon an investment idea recently. Someone was trying to pitch me this notion of investing in a company that retrains robots, which I thought was fascinating. So this person was thinking 10 years out. Like the robots are not even fully deployed, but someone is thinking about how you retrain them, because the problem with the robot, these are the physical robots, is that they have a problem gripping. So even today, if you go to a BMW plant, which has the most advanced robots in Leipzig in Germany, the robots actually have a hard time gripping anything that's not metallic because they don't have the tactile sense that we have as humans. So there are companies that are trying to improve the technology for gripping. But this guy basically was thinking about many robots are going to be out of work. And I thought it was really interesting that he's thinking of investing in retraining robots 10 years down the road. So that's kind of what we see. So there's a lot of different models out there, sensitive a little bit to to time. In terms of other companies to study, Citi, I think, Citigroup, might not strike you as the biggest innovation hotbed as a big American bank, but actually Citi Ventures has done very, very well, has been very true to its core mission, which was to basically find technologies that are enhancing to the business units of Citi. And one of the early investments they've made was in Square, the payment technology, which has paid off very handsomely for Citi. GE, I think we had some folks maybe this morning, but obviously GE Ventures has been very successful, Intel Ventures, but even these, who we consider to be some of the best in North America, are constantly fine-tuning and reinventing the model. And a lot of it today is about talent. It's very, very hard to get talent. I have a German insurance client in Munich that has spent maybe 60 million euros trying to create basically a digital incubator, and they just could not find the talent. Or the talent would come in, get excited, and within 3 months realize the corporate culture, basically made it very hard for this thing to work, and they would leave. So they basically took a $60 million write-off on what was probably a good idea. So don't underestimate, how hard it is to get the right talent. We have the talent, by the way, in Canada, so it's not an issue of supply, but it's an issue of, can you create the conditions for that talent to actually thrive and retain that talent. And Neil, you can send the detailed study around. I don't need to cover all the key things. So how do you get this done? No matter what vehicle you end up using, be very clear on what are you trying to achieve. Is this a PR thing? Is this a financial return thing? Is this I'm really worried about disruption to my core business, and therefore this is an existentialist threat, and I really need to get this right? But more often than not, the actual objective function of doing corporate venturing is not very clear. I think one of the folks this morning said this, it comes from the CEO down. Absolutely. But it has to be shared. So, as we often say, corporate venture always follows strategy. And then what's the vehicle? Do you want to set up a fund? Do you want to do an accelerator? Do you want to partner with the UFT? Whatever it is, again, think about how you're going to execute it. And then think about the implications internally. Too often we see good ideas die in corporations because the mothership is smothering them with love. And as soon as it starts going, a little bit of traction, 5 million in revenues, customers, et cetera, okay, let's bring it back into the core, and now let's apply the P&L rigor and all the constraints that you have. And the CFO gets involved, and all of a sudden it's not accretive financially because it's not as profitable as the core. And then at the first sign of headwinds, we kill it. I mean, this has happened. I'm sure some of you in the room have lived this. It happens too often in Canada. We don't have patience, and we don't have the same appreciation of failure, because more often than not, failure is what makes a great entrepreneur, not a great idea. It's the ability to have failed before and then recognize the patterns that the next time around allow you to avoid some mistakes or change your business model. So think about all this from a governance standpoint as well. What's the role of the board? How are you going to measure the progress of your venturing, et cetera, so that you don't change mid-course. And do it from a position of strength. Too often we see companies do this at a time where the business is about to turn, south, or you want to be able to fund this at least for 3 to 5 years. Otherwise, honestly, it's a waste of capital and a waste of time. And there's plenty of good examples and bad examples. And by the way, there's all sorts. This corporate venturing world has really ballooned in the last 2 years. I mean, there's awards now. ABB, which is one of the large European automation and big Swedish company, just won the biggest award for corporate venturing this year in Zurich. So I encourage you to get involved in the world. These are key questions. What we call the search fields is don't try to do too much. So if you're a bank, maybe you focus on fintech. If you're a media company, maybe you focus on next generation advertising and how can you monetize basically an audience that's sitting behind that set-top box. So the search fields have to be very precise and very clear. Trying to do corporate venturing open-ended is very hard. I mean, it's actually impossible. Even the best venture capital funds will only invest in 3 or 4 sub-themes. If you take a Sequoia Capital or Kleiner Perkins or a Mayfield. What are the tools? We talked about talent, and then think about partners and the roles of partners. It's next to impossible to have everything under one roof, so we are big believers in alliances and JVs and partnerships that works for both parties. Too often the tendency of a large corporate is to say, well, I'm bringing everything, and therefore the partner is useless. Yes, you might be bringing everything, but you're not bringing the one thing that's key, which is often talent and the ability to stick with it. And therefore, these JVs where you're giving 2% or, that are really one-sided are just not very stable and therefore will not work. So think about also how you exploit, partnerships in a way that's symmetrical. So Let me just hit a couple of slides. I know, James, you have more data and better data on the Canadian market, but just a few things, few thoughts on Canada. There's a very large discrepancy between Canada and the US when it comes to venture capital and corporate venture capital. So what you have on the right-hand side is just the corporate venture capital part, and roughly US corporations do 4 times more. If you want a headline, that's the one you should think about. Now, this has to be put in the broader context of a generational lag in R&D. I mean, for the Canadians in the room, this is a well-known fact. There's not a week without the Globe or the National Post, talking about our lack of productivity and our lack of R&D. Listen, the reality, the data is the data. It's true. So, we should not hide behind, any particular story. But I do think we have the elements to turn this. It's just a matter of getting all the various levers to work together. One of the things that, pisses off my clients more often than not is I say the private sector tends to say, well, it's the government's fault. I actually don't believe that, to be honest. I actually think that more often than not, the government is trying really hard to create the mechanisms by which, this can be solved. There's plenty of tax credits, there's plenty of educational things, there's plenty of initiatives. Now, are they concentrating their bets? Are they picking winners and losers enough? No, not to my taste. But I think actually the corporate world has a huge amount of responsibility to actually really take innovation seriously and put real money behind it, and then help the next generation companies, the next generation technologies be successful. It's only through that this is going to be solved. Like, if we expect the government to solve this for us, I actually think that the trend will not change. So, kind of a wake-up call to all of us collectively in the business world to actually put our money where our mouth is. And there's some green shoots. I mean, you see what RBC is doing with Waterloo. I mean, I'm actually optimistic that, we're starting maybe to turn a little bit of a corner. We have some advantages in artificial intelligence, both in Montreal and Toronto, that we should really go very hard after, because that is going to change fundamentally how society works. And, that's a place where we have something to do. But we have to have policies that actually really enable the scalability of all these ideas, and that's often where we fall short. When we analyze Canada compared to many of the other countries that we looked at, just what are the key gaps that prevent us from getting there? We talked about talent, and it's not the raw talent coming out of schools. It's the fact that this talent does not stay. We have 320,000 Canadians in Silicon Valley. I mean, that's a huge amount of people. That is a brain drain. I mean, people say there's no brain drain. I'm like, okay, well, just look at this data. What is this? These are people who have chosen to build their careers in Silicon Valley because it's a more attractive proposition, both from a technology standpoint, from a career advancement standpoint, from a lifestyle. I mean, everything. And these people, most of them are not coming back. Because until you give them a reason to come back, they're not going to come back. We know that we have a funding issue that too often, the transition from early stage funding to mid stage funding is complicated in Canada. We all know that, and that's why you see we don't have unicorns. Unicorns are companies that are valued at $1 billion plus. The reason unicorns are important is they give an entrepreneur hope of striking it rich, which is one of the reasons some entrepreneurs, get in the business of being entrepreneurs. So having multiple companies with high valuations that are native, that are Canadian, is really important. We don't have enough of those. As you see, the Bay Area has 50 plus companies. We have 1, maybe 2, depending on how you count. The amount of venture capital, so the volume, and this is the Toronto with second-tier supply of risk capital. This is really important. Think about Toronto Waterloo and all the advantages we have. Booming economy. We've got the educational system. We've got everything we need, and yet we're half the amount of venture capital that goes into Berlin. With all due respect to our German friends, Berlin is a second-tier city. It is a lot smaller than Toronto. It does not have the educational advantages. I mean, I don't know if anybody's been to Berlin. It's taken them 15 years to build an airport, which is a lot longer than Toronto. There is no big German corporates in Berlin. I mean, they're all in Munich, Frankfurt, Dusseldorf. We have an office in Berlin at BCG. It's called a lifestyle office. People want to live in Berlin, but there is no real work in Berlin. And yet Berlin gets twice as much venture capital than Toronto. I think that's just not right, and we've got to find a way to crack that. China is graduating twice as many STEM students as we do. That is the long game. The effect of that will be felt 15 years, 20 years from now. So I think all of these are well known, and without any animosity or criticism, the question to all of us is, what are we going to do about this? And the answers, I think, do exist, and maybe this is where I will end, because we've got a bunch of ideas. I'll skip this. I get more inspired when I see this. Countries all around the world, this is what we believe are best practices from around the world. Paris, not a hotbed of innovation, I mean, the fiscal, political, anything with L components of the French economy is very challenging, certainly more challenging than Canada. And yet, you got an entrepreneur, Xavier Niel, who basically, after making a lot of money in telecom, decides that the rest of his life, and he's a young guy, is going to be spent creating basically free technology education for smart French kids. And he basically created a university called École 42, which basically is now starting to graduate some of the most advanced robotics, artificial intelligence, digital talent in Europe. That is the private initiative of one person. Now the French government is catching on and starting to see how they can play and whether they can scale it. But that's in France. Israel, well known, obviously. The US, well known, but then you go to Dublin. So the whole web economy, Dublin has branded itself as come here. If you do anything digital, come here. Again, not a hotbed of innovation, Dublin. I mean, beyond the tax advantages they have, it's not clear what Dublin has over Toronto. And yet, the Web Summit, which is the single most important conference in the world when it comes to technology and digital, is in Dublin. Chile, again, geographically challenged as a country, small economy, Spanish-speaking, not an obvious place. But Chile has used basically immigration and very fast visa processing for entrepreneurs and some financial incentives to basically say, if you have a good idea, you're an entrepreneur from anywhere in the world, you can set up shop in Santiago in a month, you'll get all the visas you need, you'll get all the financial help you need, you'll get some incubation space, and so on and so forth. So this is a global war that's happening right now. So when you start where I started, which is we are in the early stages of a profound mutation of society where technology, whether we like it or not, is going to enable 90% of what we do and how we do it. And when you see the advantages we have as a country, as a city, and you look at what others are doing, I mean, it just kind of leaves you actually both kind of very optimistic and a little bit scared that we might miss the boat. So I realize this is a little bit beyond corporate venturing. I will send around the corporate venturing because that's very tactical. I try to land a few messages with you, which is do it, but do it smart, do it with caution, do it with a very clear sense of purpose. And without further ado, I will introduce James.